Square, everybody know the Square company. Square buys Afterpay for 200, well, not 200, but for $29 billion, and they also buy $170 million of Bitcoin. So in this episode, we're going to go through, we're going to break down that deal of Square buying Afterpay for $29 billion. What is Afterpay? Buying that 170 million, how you can look that up on a 10Q. And also they lost 45 million as well in Bitcoin. But ladies and gentlemen, if you haven't done so already, y'all know what time it is. Go ahead and make sure hit the subscribe button, hit the bell icon, hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. If you are subscribed, you're not getting notifications, turn the notifications off and turn them back on and all of the great stuff. Check out the description box for all that other good stuff. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. These last couple of days, I've been kind of stumbling on myself a little bit. But anyway, hopefully y'all having a nice Monday. I was going through the 10Q report of Square. So the first thing is Square buys Afterpay for $29 billion. Let's take a look. Let's roll that beautiful beam footage. So I have it highlighted here. This is coming off of the 10Q report. You can get that 10Q report off of the sec.gov, and it's right up under note 21, the sequential events. So let's read it word for word right out of the 10Q report. Here we go. On August 1st, 2021, the company entered into a defined agreement with Afterpay Limited to acquire Afterpay by way of court-approved scheme of arrangements for a 0.375 share of the company Class A common stock for an outstanding afterpayment original share. The estimated aggregated consideration, excluding the value of replacement of equity award, is $28.2 billion. Comprising approximately 114 million shares of Class A stock of the company. The aggregated consideration is based upon the company's closing price of $247.26 as of July 30th, 2021. At its election, Square may provide 1% of the consideration for Afterpay shares in cash. Now here they says the transaction is subject to, this is the legality part, the transaction is subject to the customary closing conditions, including, among others, approval of Afterpay shareholders of the scheme by the request majorities under the Australian approval by the company's shareholders of assurance and new shares of Class A common stock of companies' connections with the transaction by the request majority. So pretty much this is the legality saying that, hey, this is subject to, they have to go through all type of legal things and stuff like that to make sure this deal goes down. Now let's go to the bottom piece where they talk about, hey, if this deal doesn't go through, because, they have to vote on it and shareholders, all of the good stuff, the legality part. So right here, the third paragraph, it says, the company or Afterpay will be required to make a payment of 385 million Australian dollars, approximately 283 million US dollars, in certain circumstances, including in the event that the agreement is terminated by either party for an adverse change in the recommendations by either party's board of directors or the mutual breach of transaction by either party. The agreement is terminated by either party upon the party's board of directors determination that it is completing transaction is a superior proposal. So essentially they're on the hook saying that for 385 million Australian dollars or $283, that's the penalty if the deal doesn't go through, if somebody back out for any type of legal reasons. This is a way to make sure this deal gets done, So this is a $29 billion deal on the table. So reading this, all the jargon, what I'm getting from it, they're pretty much what it's boiling down to. You're looking at Square is going to give up $114 million, not dollars, I'm sorry, ladies and gentlemen, 114 million shares at $247.26, which was the closing price on July 30th, 2021. They're going to give these shares to Afterpay in return to pretty much just buy out Afterpay. and they may give 1% in AfterPay shares in cash. So they may give them 1%, which is about a couple $1 billion. Not really, that's a couple $100 million in cash, and they're going to give them 114 million shares of 114 million shares of Square. Now, when you see companies buy other companies out with stock, it's because they believe their stock is overvalued. That is, when you see companies do a cash buyout, they believe their stock is undervalued. When you see companies do a stock buyout, that's when they believe the company is overvalued. So that was the premises that I learned a while ago at some conference that I was at. But essentially, you see companies, not only can they buy you with cash, they can buy you with their stock. All right. So now let's get into it. Now you see this thing of AfterPay. If you're like me, I don't know a whole lot about AfterPay, so I had to do a little research here. What's up, Michael? Michael's over there. Michael's out there in Canada. We got Canada in the building. We got Canada's in the building right there. So right here, now we got to ask this question: what is AfterPay? So you look at AfterPay. AfterPay is a company that I discovered. It's one of the companies out there. So what it does is it allows you to go into, I don't know, Walmart. You can go into Walmart, buy $100 worth of groceries. Let's say if you don't have the $100, like a lot of people are struggling right now today, or you may not even be struggling, maybe you just don't want to pay today. You can say, hey, I can walk in, buy $100 worth of groceries from Walmart. So let's say if I don't even have the $100, so I could walk in, buy $100 worth of groceries from Walmart, and then when I walk out, this is, you didn't have the money. AfterPay is giving you the $100, or the company, however they're running it, and the customer gets to walk out without paying for the stuff, and they have up to 2 weeks to pay it back. So they can make an installment of 4 payments, 4 equal payments. So they could pay, since I went into the store, I brought $100 worth of stuff, I can take $25 a piece. I mean, I can pay $25 in payments of 4 payments to pay the money back. If I pay it back within 2 weeks, I don't get to acquire any interest. If I take more than 2 weeks, then I acquire interest. Y'all kind of get that? Now, the downside to that type of business model is, what if a person doesn't have good credit? What if a person doesn't pay back? I was kind of thinking of those things, but that's what AfterPay does. It allows people, it pretty much kind of replaces credit cards where, hey, I can go in, if I pay it back in 2 weeks, almost like a charge card. If I pay it back within 2 weeks, no interest. If I do take more than 2 weeks, then that's when the interest comes. Okay. So that's what AfterPay is. Now let's get down to the Bitcoin portion. All right. Let's get down to the Bitcoin portion. Now, I've been following this company here, Square. They made some huge investments in the Bitcoin. So here's one thing that you can see here. Well, I'll get to that one later. We can get to, give me 1 second. Let me pull it up here. Okay. Losses there. We're going to go to my 6 months. Here we go right here. This is up under their consolidated cash flow sheet. So this is their cash flow sheet, and then for 6 months from January to June 30th, this is their cash flow sheet here. So right here, purchase of Bitcoin. You can see right here, purchase of Bitcoin. In the last 6 months, you've seen purchase of Bitcoin investment. So they made $170 million investment in the last 6 months into Bitcoin. You can see that right here. Now, this is showing up with the parentheses beside it because this is money that went out of the company. So they made, over the last 6 months, that's 170 million. You can do 170 million divided by 6. That can tell you possibly what they did in a month. So that's what they did there. Now, on the reverse end, you can see this. This is right here on the report they put out today. They're doing their last 3 months and their last 6 months. You can look at the last 6 months of last year. They didn't purchase any. The first 6 months of 2021, they purchased 170 million. Now, on the reverse end, we all know that they are very big on buying Bitcoin. Let's take on the reverse end. Where did I get they lost? In the last 6 months, you can also see where they lost on Bitcoin as well. So right here, over the last 6 months, they lost 65 million. You can see Bitcoin imperative losses because you can see Bitcoin going up and down. Over the last 6 months, they lost $65 million because of, I'm pretty sure they probably brought it at a high price at the beginning of the year when it probably was $50,000 or something like that per coin. And it's gone down. I think it's around 30, 40 some thousand, if I'm not mistaken. But who knows? By the time I can hit the record button, this thing is probably changed. But in the last 3 months, they lost 45 million. You can see it right here. The last 3 months, they lost 45 million. You can see right here in the last 3 months ending in June 30th. So you're talking about April, May, June. In April, May, June, they lost 45 million in Bitcoin because, the Bitcoin price have dropped over the last few months. So I'm paying attention to this, Prince. Why am I paying attention to this? I'm paying attention to this to see how companies are, as the price of Bitcoin maybe goes up, I can see how this can end up on what particular companies. Tesla was a company that's very big in the Bitcoin square, and there's probably some other big companies out there as well. But you can see how the fluctuation of Bitcoin prices shows up on corporate earnings reports. All right. So, ladies and gentlemen, that's going to conclude today's topic. I hope y'all guys and girls got something out of it. A quick overview. We talked about Square buying AfterPay for 114 shares at $247 for $29 billion altogether. We talked about what was AfterPay. Then we looked at over the last 6 months, Square purchased 170 million. Invested 170 million in Bitcoin, and over the last year they lost 60. Over the last 6 months they lost 65 million in Bitcoin, and over the last quarter they lost 45 million in Bitcoin due to the fluctuation of prices. So, ladies and gentlemen, that's going to conclude today's episode. Hope you guys and girls enjoyed that. Let's see what Mike got to say before I roll out of here. Mike in the comments, he said, I like Square. I think fintech is changing the game. You're definitely right. Fintech is changing the game. Fintech and biotechnology. That's where I'm kind of fintech, biotechnology, and real biotechnology with all this pandemic stuff going on. And as we have an aging population, I think big biotechnology will become bigger. We will always buy stuff. We will always get sick and die in healthcare. We will always buy stuff in retail. And those are my ways I look at it. Genonomics, you're right, Michael. You're right, Mike. But anyway, that's my lemonade brother there. But ladies and gentlemen, hope you guys and girls got something out of it. And to the next video, podcast, cartoon, or whatever else crazy y'all see me do around the globe. Y'all already know what my name is, Prince Dykes. And I'm the Prince of Investing. This is the Investor Show. Peace. Be safe. I'm out.